Hey everyone, welcome to another episode of Brett's Brain. Today we're going to talk about term sheets. Why do they exist and what happens after you sign one? Hey, I'm Brett Burrell, former entrepreneur, current venture capitalist. Thanks so much for checking out the channel where we try to help entrepreneurs build big businesses by answering questions that are really common out there. If you have anything to ask us, please let us know. Make sure you share, like, subscribe, do all those things. Okay, the term sheet. So why do term sheets exist? Like if you're just going to close a round of capital, do you always need a term sheet? No, the answer is you don't need a term sheet necessarily. And oftentimes, if you're doing a safe or convertible debt note or you're doing a smaller pre-seed round, like you might never sign a term sheet for those types of rounds, and that's okay. Because the reason a term sheet exists is that it enables a founder and an investor to negotiate on key terms and come to agreement prior to going into deeper diligence or documentation and getting lawyers involved and start incurring more fees, which can take a long time. And so if you're doing a common safe note, it might be a little bit less important to have a term sheet signed. So when you get a term sheet is issued by a fund. So a fund issues a term sheet to the founder almost 100% of the time. We've never had a founder issue a term sheet to us or give us a term sheet. But then you go through and you talk about some key terms, things like valuation, preferences, stock option pools, those things that are really important to both an investor and a founder often get fully negotiated during the term sheet process. A couple things to note. One is that once you sign a term sheet as an entrepreneur, you have what's called a no shop clause almost always. So once you've signed a term sheet, you're not allowed to go out and try and get additional term sheets from new investors. And that's really important because now as a founder, you've lost all of your leverage. So you want to, as a founder, negotiate as many points on on the terms of the deal prior to signing the term sheet versus signing and then starting to negotiate, because the investor has the upper hand if you can't go out and raise anymore. Another couple key things or a couple things that often happen once you sign term sheet. Usually there's a kickoff call between the two legal teams. So the two legal teams will meet, talk through docs, talk through what the process is going to look like going forward. Depending on the fund that you're working with, there might be additional other diligence, business side diligence that they need to do. And so the round isn't done once you sign a term sheet. You still might need to do reference calls. You might need to verify contracts. There's a whole list of things that might need to be done prior to signing or post signing a term sheet with an investor. So keep that in mind. Signing a term sheet also doesn't mean that the entire round is raised yet. You might sign a term sheet for a $3 million round and the lead investor is going to invest $1.5 million. Well, you still need to have that other $1.5 million before you can close. One of the cool parts about signing a term sheet, though, is that now that the investor and you as a founder have come to terms or agreed upon all the key terms, that investor usually now tries to be really helpful in making additional introductions to new investors that can help you close out the rest of the round. So you can go from that 1.5 committed to 3 million committed. But just a couple quick things as we close out here. One is keep in mind that just because you sign a term sheet, the round's not done. There's still legal diligence that's going to get done about your company. And in many cases, there's still business diligence that needs to get done. It's really important for you as a founder to understand what has to get done still so you can understand the risk of signing a term sheet and having that no shop clause. The second important thing is that make sure you have enough runway to get from term sheet signed to close. It's almost always at least 4 weeks from a documentation standpoint and additional diligence standpoint. But it can take 4, 6, 8 weeks even. So just be aware that signing a term sheet isn't the end of your journey. It does tend to get a bit easier after that. And third, don't forget to make sure you negotiate all the key points as an entrepreneur prior to signing the term sheet. Because once you have that no shop clause in, you're not going to have the leverage anymore. Because the leverage you do have is that, hey, I've got multiple funds interested, so we want to negotiate the things that are most important to us up front now to make sure that we're all well aligned before we close this investment. Hope that was helpful. Make sure you like, subscribe, and share, and ask us questions so we can help you in your journey.